Quite a brutal day today, quite a brutal correction. In fact, if I look at the charts, we got to 114,127. And if you look at the altcoins, that's pretty much what it looks like. It's not a pretty picture. There are two reasons for this potential correction or this correction happening. And I'm going to show you both of them today. And we're going to discuss them today. The first one is that the market is getting scared that MicroStrategy may not be buying as much Bitcoin anymore. And that's quite a big move to the market because there could be a hole of about $600 million a week missing from the market. The other reason why the market may be moving down is this, and that is that the tariffs are back. Today is the 1st of August and Trump announced new tariffs, including Canada going from 25 to 35, Switzerland going to 39, etc., etc. So we're going to talk about both those reasons, and we're going to talk about a whole lot of other things today and decide whether we're going to get a big correction in August, like one of my guests said today, or whether this is going to be a short-term thing. Today's the day you really don't want to miss because there's so much alpha in the show. It's going to blow your mind. All right, let's not waste time. Let's just get straight into it then. Do you still say GM when the bubbles look like this? Do you still say GM or is it not GM?
It's OMG.
It's not GM, it's OMG. That's exactly what it's like. Well, it's a red day today, but I'm going to show you today why I'm not too stressed about it. We're going to explore why the market is actually red today. We're going to talk about the Michael Saylor thing. We're going to talk about the tariffs thing. We're going to talk about whether these treasury companies are good or bad for our cycle. And then we're going to talk about this potential correction that's going to happen in August that one of the most astute investors in the space is actually talking about. So guys, if that sounds good to you, it's Friday today. I need you guys to do me two favors. The first favor I need you to do is just to obliterate the like button. Just help me get distribution of this content. I'm going to carry on bringing you content. I've got a banger dropping for you this weekend. And I've got 4 shows that I need to drop for you guys at some point. So there's lots coming. The second favor that I need you to do for me is actually a favor that you need to do for you, right? And that is that our Friday Banters are sponsored, and they've been sponsored by NordVPN for many years. They've been like one of our best partners, and like this is really one of the partners that I respect most in the space. And the reason why I respect them so much is because they literally keep us safe in the space. I didn't realize how important a VPN was until I realized that my IP address is linked to me with every single application that I use, and that effectively governments, DeFi protocols, they all know exactly where I'm surfing because of my IP address. Now, what you can do if you want to mask your IP address is very simple. All you do, and I'm not going to connect you because then it's going to disconnect me from the internet. You literally get yourself a VPN. So that's what a VPN looks like, right? And so let me actually share my screen. Then you can really see what a VPN looks like. So that is what a VPN. This is. Hold on. Let me get that VPN again. There we go. Now that's what a VPN looks like. You can see that right now I'm not connected, and as soon as I do connect, I can choose where I want the applications to think that I am. So if I want to pretend that I'm in Afghanistan or Albania or Algeria because I want to access an exchange or because I want to watch content that I'm not allowed to watch in my country or because I just want governments not to know what I'm surfing, I just get a VPN. The best VPN for crypto is a NordVPN. If you're in crypto and you're not using a VPN, I really don't know how you're going to protect yourselves. I really don't know how you do it. Here you can get a deal, and the deal is under $3 a month, literally under $3 a month to protect yourself, and a money-back guarantee if you're not happy. Also, if you do get NordVPN, sign up to the other things that they've got. They've got this thing called threat protection, which protects you from going onto illicit sites, and they've got Incognito, which takes you off these dark web databases. Honestly, guys, do me a favor, do you a favor, protect yourselves with NordVPN. There are links at the bottom of the show. Let's do it, and let's get the real show on the road, and let's get talking about the actual. I like what you did there, bro. You did like the double Phoenix. I like what you did there. Anyway, let's talk about the alpha today and what's actually going on in the markets. As you guys saw, the markets had a little bit of a correction. We got to about 114,000 overnight. And 2 reasons for this. The first reason, which I'm going to address very quickly, is Trump. Again, you know, there was a tariff deadline. The tariff deadline was the 1st of August, except for China. And I guess that these countries haven't yet done deals. And you know the Trump story, you know the Trump playbook. Trump is imposing tariffs on these countries. And I guess the market didn't like that because maybe the market thought that tariffs were behind us. my view here is that just like all the other times, first of all, I'm not sure that these countries are that significant in the big scheme of things. I think the EU, I think China, I think India, those are much more significant. I mean, how much trade does the US do with South Africa? The second thing is that I also think this is a negotiation tactic, and it's a way for Trump to bring these people to the table. And so I almost guarantee you that something's going to happen here, just like it's happened every other time. So this doesn't worry me at all, and I don't think it's something that we should be too fixated on. I think this is something that will actually pass. The next reason why the markets are going down is maybe a little bit more fundamental. So I think the one thing we know is that MicroStrategy has been the biggest Bitcoin buyer in the market. And I've warned many times that one of the big risks is that MicroStrategy will actually stop buying or slow down on their buying, because they've been the one buyer that has been powering the Bitcoin cycle. You know, the Saylor posts every week, regardless of rain or shine. We always know that Saylor's going to go out there and Saylor's is going to carry on buying, and that's a list of all the Saylor purchases. Just look at all the buys that Saylor has been doing. Now, these buys have been propping up the market, and the question is, where does Saylor get the money to actually buy these Bitcoin? Well, that's the thing, right? Saylor does two things. He issues, or three things. He issues debt, he issues shares, equity, or he issues new types of preferred equity. So you've got the MicroStrategy shares, and Saylor issues more shares, or you've got the convertible notes, which is fixed income securities, or you've got new share classes that Saylor that Saylor has created to raise more money to buy more Bitcoin. Now, every time he does that, every time he issues more shares, he dilutes the existing shareholders. And that's and this is the premise of what actually started happening yesterday. So the first thing that happened was Saylor actually reported results, and they posted one of the biggest earnings beats in history. $32 per share versus 0.07 and revenue of $114 million. One of the big reasons for this is because of the accounting standards, because for the first time, Saylor can actually use the new accounting standards, which allow him to mark up the increase in the value of Bitcoin to his books. And that is why the earnings per share went up so much, right? Because in a period where Bitcoin's going up, like Bitcoin went up over here, that means with the FASB change in accounting rules, which Saylor was actually responsible for, it means that Saylor can now account for his profits. But if the prices go down, then there will be a loss in the next period, right? So he beat by 46,000%, and now he's starting to really get this going. This is the biggest beat. I think this is the biggest beat in earnings history ever. That's what I think. The flip side, though, is that what he also announced yesterday is that they issued guidance that they would no longer issue common equity to fund Bitcoin purchases unless the company trades at above 2 times NAV. So for those of you who don't know what that means, up until now, Saylor's been issuing more shares, diluting existing shareholders, and with the proceeds, he's been buying Bitcoin. What he's saying now is, we're not going to issue more shares unless our share price is trading at 2.5 times the net asset value of the Bitcoin that we hold. And right now, the NAV is trading at 1.8 times. What does this mean? Well, what analysts fear that it means, and probably why Bitcoin actually took a hit, is that unless the MicroStrategy share price goes up to 500 or 600, then MicroStrategy that's been buying so much isn't going to continue to buy as much anymore. And if that buyer is out of the market, then the price of Bitcoin should actually go down. So, as this says, since November to today, Saylor has bought roughly $36 billion of Bitcoin. That's a crazy number. That's like almost $1 billion a week. Therefore, 2/3 of the purchases were fueled by common equity. And so using our year-to-date run rate, that's 600 million a week that would need to be substituted by new buyers. And that's the problem. Well, that's the problem. So it's great for MicroStrategy because it means that if you own MicroStrategy shares, you ain't going to get liquid, you ain't going to get diluted anymore. And I would imagine that in after hours, I don't even know if the after hours market is yet open, But I would imagine, okay, it's going down because the Bitcoin price is going down. So yeah, I would imagine this is very, very, very good for MicroStrategy shareholders. But it's bad for the market because the market's now saying, where are we going to find the $600 million a week that Saylor has been buying? And that's why the price of Bitcoin is actually going down. So here's my very quick views about this. I don't think there's anything to worry about. And the reason why I don't think there's anything to worry about is because MicroStrategy is not the only gig in town now. What we do know is that this cycle is being powered by treasury companies. A lot of them are Bitcoin treasury companies, right? And so I think gone are the days of having to rely on one buyer, right? The second thing is, I don't think Michael Saylor is going to stop. I just think he's going to he has been the smartest financial engineer of our cycle. I don't think he's going to stop buying Bitcoin. I just think he's going to come up with more new creative ways of financial engineering to land up buying more Bitcoin. And so because of those two reasons, I kind of think that this correction is a little bit of a nothing burger. It's probably a healthy correction. We probably needed it to shake out, like we need a correction in every cycle. And if you look at the fear and greed index, if you look at fear and greed over here, fear and greed index, let's see if it brings me the crypto one or the stocks one. Okay, so let's just quickly, we know that up until now, the fear hasn't actually dropped. I would imagine that when this updates tonight, I think we're going to go into neutral. And that's probably what we need to go into the next part of the cycle. But it does beg the question of whether these treasury companies are good or bad for the cycle. And to that, I want to bring two of probably the smartest investors in the space today. I've got Avi and I've got Santiago with us. They are two of the best investors in the space. And I think probably a good place to start is like these treasury companies. Do we love them? Do we hate them? Let's bring the guests on. Guys, welcome. Welcome. You're both no strangers. Santi and Avi, welcome to Banter again. Let's get straight into it.
Thanks for having me.
Treasury companies, good thing, bad thing? Should we be excited about them? Should we be excited about all these announcements of SharpLink and Tommy Lee and all these new ETH companies and Hyperliquid companies and Binance companies? What are our thoughts here? Are we bullish or bearish? Avi, I'm going to start with you.
I'm kind of straight down the middle. The way that I think about it are treasury companies are the 2025 version of the 2017 ICO. And as we all know, the vast majority of ICOs were completely useless. 99% of them went on to be complete failures. But what it did introduce is it introduced an interesting new way to basically get your company into the hands of millions and millions of people. And that's kind of how I view treasury companies, is that most of them, the vast majority of them, are complete nonsense. But as we've seen, MicroStrategy itself is a treasury company, and it's lasted for quite some time. So it's also brought in a ton of people into Bitcoin. It's managed to get institutions in. It's generated excitement. It's really helped Bitcoin over the last 5 years. So there obviously are some upsides to treasury companies, but I think now we're kind of heading into the downside version where there are too many of them, they're buying too many tokens, and they're taking on too much debt. And that's putting us in a very difficult situation.
Okay. Santi, what are your views?
In line with Avi, look, there's nuance in the structures, in the managers. There's only one Michael Saylor. And so I've been surprised of what they've been able to accomplish. I think MicroStrategy worked in the sense that you didn't have options. You didn't have a way to express like a levered view in traditional markets with Bitcoin. And they sort of were first, and Saylor's a very personal character. They have some interesting, like, if you're a sophisticated trader, you can do it yourself. But if you're retail or a bit lazy, you're willing to pay a premium because MicroStrategy will do a levered bet on Bitcoin with like some really good financing structures. It basically like you won't get liquidated, so to speak, in the way that you would normally do. So like MicroStrategy is in a rare category of its own because it was first, it has scale, it has the personable character. And the same with it, Ripple has Brad and they have command brand power. I don't think that's true for the vast majority of the other strategies. Now, can Joe Lubin be that person for Ethereum? Unclear. I go back to traditional, like fundamental analysis. There's two comps here that are relevant. SPACs, if you remember those back in the day, they were all the rage. There's only one specific category of investor that made money on SPACs, and that was the people that put them together. Everyone else lost money. And that leads me to my second conclusion, which is why I'm lean quite bearish on these DATs is you can't. I guess it would suck if you wake up in 5 years and you bought one of these DATs thinking that you're going to have long exposure to Hyperliquid or Ethereum, and you're paying a pretty healthy premium based on NAV. And you wake up in 5 years and you say, oh, wow, the underlying asset, Hyperliquid or Ethereum, rallied, but I didn't make money on this. How so? And I think that's where it would suck that you got the thesis right, meaning you're bullish on these assets. Go buy them in an exchange.
So, I mean, yeah.
I can't reasonably justify, and I haven't heard a compelling argument around how do you justify the premium for the vast majority of these DATs. And a lot of it is a narrative that's on the come, in the same way that there was a lot of narrative on ICOs. But I think it is better to hold spot, and if you want to get fancy, buy some options or perps or whatever.
Yeah, I mean, I have a thesis. I have a thesis on these things. I mean, I'll give you my thesis. There's good and bad. I mean, the good thing is that these treasury companies are giving people access to equity market or traditional financial market capital. So we're no longer playing in the $4 trillion in crypto. We have access to a percentage of the $80 trillion in financial markets. The second thing is they've opened us up to, in those markets, they've opened us up to debt markets and, you know, fixed income, which is exactly the playbook that Michael Saylor created. Here's what worries me though. Every crypto cycle ends because of too much leverage. In fact, most market cycles end because of too much leverage. My definition of leverage, using money that doesn't really exist to buy assets and prop up asset prices. So 2008 housing market, I think we all know what happened. The banks created money that didn't really exist. It drove up the price of properties that collapsed. 2021 crypto, we had this magic money called Luna, propped up the crypto market by, I don't know, whatever the number was, $40 billion, $100 billion. And that when that money disappeared, so did all the leverage in the system. Here's my concern here. Most of these treasury companies are trading at a premium to NAV. Now, the premium to NAV is the differential between buying the asset and leveraging the asset by using debt and equity combination. And that's what people are buying. So effectively, people are paying a premium to NAV, which represents leverage. At some point, that leverage bubble gets too big if these things start trading too much above NAV, and then it collapses. Now, let's talk about what happens when it collapses. When it collapses, they all go and start trading under NAV. When they start trading under NAV, there's no reason for them to exist. Then the first and the second and the third one shut down, and they start dumping their crypto assets. When they start dumping their crypto assets, all the crypto assets go down. And that's how, in my opinion, that's the leverage right now. That's the leverage in this cycle system that ends this bubble. Well, let me give you one more good thing out of these things. I do believe, though, that if you have a good treasury company, and I've spoken to some of the treasury companies, they can act as a quasi foundation. So like almost like the ETH Foundation, but it's a for-profit where they're so incentivized. They have so many tokens. They can stake. They can seed DeFi projects with a very small percentage of their tokens, and they can do a whole lot of things. And they can act almost as a second Kickstarter for the project. That for me is the good and the good, the bad, and the ugly of the cycle. But I'm almost convinced that this is the leverage that ends the cycle.
Yeah, I think to go back to the point on the premium specifically, there are reasons for that premium to exist that aren't just leverage. So I've been working with some of these treasury companies. One of my friends actually works at one of the banks that has structured a lot of them. And what he's telling me day in, day out is there's so much interest from traditional institutions buying up these treasury companies from places like Millennium, from places like Citadel, because a lot of these guys, there's billions and billions and billions of dollars in what are called pod shops of these guys that want access to crypto, but they're paid to generate alpha, and they can't buy an ETF because it's technically a managed product with fees. So they can't layer on fees, pass it to their investors. So they're $15 to $30 billion coming from these hedge funds and alpha generating shops that want access to crypto that are just pumping these treasury companies. And they're buying them out in the open market because, yes, leverage is a component of it, but it's kind of like the next level of hey, there is a market that still to this day can't access crypto and is buying these treasury companies. Now, the problem is that game's not going to last forever. At some point, it's gonna fall apart, because you can't have all of these companies issuing debt to go buy tokens and then have those tokens go down. It's okay for MicroStrategy because of the way that MicroStrategy has structured their debt, but basically nobody else has been able to structure their debt the way that MicroStrategy has, which means that there are clauses in this debt that say, hey, if Bitcoin's down 30-40%, we can actually force you to liquidate. There are forced liquidation clauses in a lot of these treasury companies' papers if you actually go look closely. And that's the part that really scares me, is basically every single person out there is thinking to themselves, if I have the capability of starting a treasury company, I might as well, because it's free money, like you guys said, for the people that start that.
Well, I want to show you something. Because I actually dug up this announcement. This is the Sharplink announcement, right? They announced initially that they raised $425 million. If you read between the lines here, you can see that the people that backed this thing were 𝗏𝗏i, Electric Capital, Pantera, Ericsson, Galaxy Digital, Ondo, White Star, and they give you a whole list of investors. I know for a fact that every single one of those investors got ETH on their balance sheet, right? And this $425 wasn't a cash raise. I think they went to people who had ETH. They said, look, if you give us your ETH, we'll give you shares at net asset value plus 5 or whatever it is for the sponsors take, and then you get liquid shares at a premium which you can sell on the open market and go and buy back your ETH, and then you're holding the same position plus a little bit of fat that we've taken from the retail.
I mean, this is happening across the board, and it's actually most egregious in the treasury companies where there are locked tokens associated. So, for example, the Solana treasuries that are being raised are accepting locked Solana in kind at par value to basically pump the numbers up of the raise, and that's how they exit their locked Solana position early. So they're kind of just dumping to retail a little bit earlier, and that's what I'm not super happy about with the way that treasury companies are going down. Is it is just a way to kind of get out of these positions, these massive positions that you can't sell right now.
That's an excellent point, Avi. Those are the ones that are gonna the NAV likely. These are the DATs that likely explode the fastest, just because it is a way for anyone that bought into the FTX transaction with Galaxy is using these vehicles to basically monetize their position. And so go look at the ones that have, like, 𝗬𝗏𝗁𝗃, for instance, has raised a ton. I think Joe McCann is raising another vehicle, and I've heard rumors around like $1 billion mark, which is a lot of that is locked SOL. And so again, it's a duration mismatch. I would like to remind the audience that look, this is not the first time that people are going to pay a convenience fee to access the space. We had Grayscale premium that existed for such a long time. Go study the premium. And it was a widow maker trade.
But that was one of one, Santi. That was one of one. That Grayscale was the only way that you could get in without opening a crypto account. Now you got ETFs, you got treasury companies, you can pretty much, in most banks, you can pretty much go and buy Bitcoin. Like most banks today allow you to buy Bitcoin.
Well, that's my point, really, which is Avi's observation is really good, which is most pods, like if you're a hedge fund, you can't buy an ETF. So I hear you on that. That's like an interesting pool of capital. So like assume that there's like probably more incremental demand for this for the foreseeable future. That eventually dries up. Hedge funds are incredibly mercenary. As soon as Bitcoin goes down, they'll be the first ones to punch out. Like there is no affiliation. They're probably running some like crazy strat but putting that aside, I do think that like, as we have more ETFs, as we have more robust option markets for other assets, then it's just, to me, that's the biggest threat that you have for these DATs, which is more and more of that demand for the asset can be expressed with low fee products. And so you wouldn't want to pay a premium. You're not going to pay an egregious sponsor that is structuring these things when you can get access directly through your bank account, your broker, or through a low fee ETF. So at the end of the day, I mean, these things don't persist. Arbitrage opportunities don't exist forever, and they usually tend to blow up. And I think it is, look, go at it. If you want to do them, by all means. It is a game of musical chairs. A lot of the people that I've known that I've invested in these say, yeah, I understand everything you're saying. I'm just going to play the cycle and I'm going to exit before everyone does. And, to that, I would say, good luck, soldier.
What I want to say is, hear me out on a few different types of treasury companies that might make sense. And I want to hear if you guys agree.
Okay.
So for example, if you want to buy Ethereum and you buy Ethereum in an ETF today, it's not being staked. So
not yet.
Does it make sense?
We're very close.
But we're very close, but does it make sense today to go buy a treasury company that accumulates ETH over time that not only can stake it, but can restake it and do other things in DeFi with that ETH to generate excess yield on top of what an ETF will ever be willing to provide you? I mean, BlackRock, I don't think they're going to go down the hole of DeFi anytime soon. I do think it probably will happen in like 5 years, but there's probably a period of time where an ETH treasury that does DeFi activity has some merit to it. What do you guys think?
Wait, what premium are you willing to pay for the DeFi? Like, what are you willing to pay for the DeFi? Like, are you willing to pay 0.87 premium, 87% premium to NAV? Are you willing to pay 54% premium to NAV for the debt, for the DeFi, and for the staking, restaking, and DeFi? To me, that sounds a bit rich.
No, I think that's steep, but I do think that there's a place for them. For the next few years. I think it does make sense, because I mean, if you step back and you think about it, in 2021 we were all super excited when Elon Musk was buying Bitcoin on corporate balance sheet. What we're doing now is we're like backdooring crypto onto corporate balance sheets in some way. And so the way that I think about it is, you either need to be productive with the crypto itself and do something differentiated with the crypto itself, or you need to have an operating business that generates cash and you're buying crypto. Both those cases produce interesting treasury companies. Outside of that, not so much.
Yeah, I think of it the same way too, which is, if you can look, the other end of the argument here, some might say, go look at every other company out there and why, Facebook doesn't trade at NAV. Google doesn't trade at NAV.
Yeah, but they have operations. They have operations. They've got incomes. They've got a platform.
Exactly my point. And then you work backwards and you say, which of these companies actually has any competent people within that organization to do something productive with this asset? And look, I mean, there are flavors of, staking and producing other tangential sources of revenue and creating a business around that. Go at it, right? For sure. I always felt that MicroStrategy would lean into their data edge to create some sort of like a Bloomberg for Bitcoin digital assets. They haven't done it. But if you're Joe Lubin and you're like Sharp, what is it, like Super? What's the name of that company?
SharpLink.
Something like that, I'm paying attention to, and I'd be willing to entertain some sort of premium. But again, I can't justify it today, and so for that reason, it's just tricky. Primarily because I think we're like sort of mid-stage, 3/4 of the way there on this cycle. So I feel nervous when I'm buying something that, you need to believe a whole set of assumptions to justify a premium, where again, I can just go buy the ETF.
I must say, I'm not one for buying.
I'm with you, Santi. You know what this reminds me of right now where we are? It reminds me of when Bitcoin hit $10,000 in 2017. It's like we're so close to the end in terms of time, but there's still a 2x to go.
True.
Okay.
Again, but that 2x exists for a very short period of time. So when I'm not in the business of timing markets, guys, I've been in this industry for such a long time. I keep it simple. I have never met an investor that has systematically predicted markets and so for that reason, I think that 2x likely comes in a span of weeks, maybe faster, given how much demand there is out there. So I don't ever want to play the timing game. Plus, by the way, this reminds me of a lot of the same folks that bought Terra understood that there was something that was not likely going to persist. All my thinking around this is, if you're going to invest in some sort of arbitrage opportunity, just make sure that the size of the door on the way out is actually pretty big. Because if it's not, good luck. NFTs, the size of the door wasn't big. Terra, the size of the door wasn't really big. And so you just got to understand that dynamic.
I must say, for me, the way I see these things is these guys are exit liquidity. Whenever I buy an asset, I always think to myself, who's going to be the marginal buyer of my asset, right? And this is the marginal buyer of my altcoins. And, you know, the next step is I've got to think about who's going to buy the altcoins from these guys, or who's going to buy the shares from these guys. And to me, like that's the part of the cycle where I don't really want to be involved. I want to sell my assets to these guys, and then I probably want to go lower down or higher up the risk curve, lower down, and try and find the next bets where there is going to be a marginal buyer. So I think for crypto native people, I don't think we should be entertaining these assets. I must be honest, I've been offered to participate in a couple of these assets where you give them your assets and then they give you shares at NAV minus 5 kind of thing. So there's a 5% carry. And then you kind of hope that they open up like on a 3x or a 4x or a 2x, and then you can quickly exit and cash the premium. I'm keen to play a couple of those. You know, as someone in the industry, I'm keen to like have a little bit of fun, but it's certainly not part of my core investment thesis. I'll tell you that much.
Like, guys, don't overthink it. Like, I tend to think like, look, Bitcoin can run up to 200K and I wouldn't flinch. I sort of think that that's certainly possible for a wide variety of things, given the regulatory environment, what you just saw with the White House, the Genius Act, like all that stuff in my mind is super positive. Don't overthink it. You know, like you want to be holding an asset that at this point in the cycle, I think you have to think about the downside and where you're going to be mentally if an asset like Bitcoin goes down 30%. Like, are you going to be mentally sound and want to hold it for the next couple of years, or are you going to be frantically trying to sell? And I think these are the sort of things that you should be thinking about at this point in the cycle. And like, do you really think that you're going to capture 99% of the returns that this cycle gives you? Like, you're trading in way more risk units at this point for the expected return that you're going to get. And so for that reason, like holding something like spot Bitcoin is
so
if it doesn't tax, you can
it's true
faster than if you buy illiquid stuff or stuff like this that you just know there's going to be people that are going to be so trigger happy because they want to lock in their gains. Like, it's just
Santi, it's a great point. I mean, we just saw, for example, there to your point, Santi, there's a pretty big door on Bitcoin. Roger Ver, whoever it was, just sold $8 to $9 billion of Bitcoin, and the price barely flinched. I mean, that's a pretty big door. What I'll say is, you know, we started the first half of the conversation talking about how nervous we are about the DATs, and I am nervous about the DATs, and I think we all are. But just to put it in context, I think $90 billion in total has been raised, of which $70 billion is Michael Saylor. So there's $20 billion of other stuff that's been raised, and if that all got liquidated tomorrow, I think we would still be able to bounce back. And it's not big enough yet to the point where I'm saying that it's a structural issue. I mean, like, if you think about the 3 hours collapse or the FTX collapse or all this other stuff, it was much larger per unit of market volume. Now, I mean, we've proven that we can absorb $9 billion of Bitcoin. If we'd have to liquidate, you know, half of what is outside of MicroStrategy, that's 10 billion. It's like, okay, it's not existential yet, but if it grows, it might be.
What about Solana?
So yeah, I think the thing you both touched on is the fact that you both think that we're in the late stage of the cycle, and we know that this late stage of the cycle tends to get pretty aggressive pretty fast. Does that mean that your base case thesis is that we top sometime around the end of the 4-year cycle, which is like the end of this year? Is that how you guys are playing the cycle? Are you even watching the 4-year cycle? Does it even matter anymore?
It's a question that's been, I think, debated back and forth a lot. And my opinion on this is that the 4-year cycle is over. Like, I don't think we're going to see a 70 to 80% drawdown in Bitcoin kind of ever again. That would be my take. I think it's too institutionalized at this point. I think you can 100% see altcoins down 90 to 99%. And what we probably see is we see a cooling off. Like, we see a Bitcoin go from maybe a 200 to a 150, or let's say it stops here, it goes back down to 90, and the rest of the market is totally decimated. But Bitcoin itself maybe draws down 30 to 50%. I don't view this as a 4-year cycle anymore. I actually view Bitcoin as way more analogous to the S&P and maybe NASDAQ than I do to the 4-year cycles, because I think the 4-year cycles were really, a lot of it had to do with the halving and the attention that it brought, and then like how long it takes the market to like flush out the memories of the last crash. And I think Bitcoin just has so much attention on it now. There's kind of like no way to increase that attention. It's like that attention kind of has like a baseline now. It's not going to die off.
But do you still think we're going to get like a very rough ride towards the end of the year? Like Santi, you managed that like the things can double in the next like few months. Do you still think, because that's part of the 4-year cycle where you get this like big move? So like this, I mean, are we still going to get that aggressive move, or is this just going to be like a slow, sustained grind, 120, 180, 100, 130, like that kind of thing?
I mean, look, anything's possible. I mean, you just saw yesterday Meta and Microsoft add like how much in market value, like $1 trillion, 500 billion or so, 500 billion, give or take.
Good
so like
result,
from a flows perspective, it's certainly possible that like, that's how I think of like, can this asset actually double? It doesn't take much for even something like Bitcoin to go to, roughly double in price. It's certainly possible. You have more and more interest. I would agree with like Howard Marks says something that I think is very true. Like markets change, but human psychology does not. And so from that reason, is it going to get euphoric? I'm paying attention to the floor of NFTs. They're catching a bit. There's wealth creation. I generally think that like NFTs are sort of signaling of like late market dynamics. However, I do think I agree with Avi. Bitcoin is sort of branched out in its own category where it is the perfect meme. It is getting, I would like now branch that off, and we should think about Bitcoin and then everything else. And I agree with Avi's view. I think, is it possible that Bitcoin could go down 50%? Absolutely. Look at Liberation Day and what the markets did. Like anything is possible. It's still very much a risk on asset. You best believe that the S&P is down in bear market territory, like down 10%, 12%. Bitcoin's going to be down by a multiple of that. And so, but I do think that the max drawdown should, for at least Bitcoin, be lower and lower in subsequent cycles.
Okay, what about ETH? Because you keep talking.
People forget. I just want to visualize this for a second, because I think it's like already happened. Like the market structure has already changed, and you just have to understand. Is there any way you can pull up a Bitcoin chart?
Sure. Here we go.
Put it on a weekly.
Sure. There we go.
Put it on weekly, and then make it logarithmic. I don't know if you right click, you can change it to log.
Or in the bottom.
And then just look at how Bitcoin has moved it basically throughout its entire life, and then look at the last 2 years. It's
Okay.
like it's a totally different asset, guys. It's like climbing up slowly over the last 2 years with like some aggressive moves, but it looks nothing like the Bitcoin of pre-2021. It's a different asset now. It's a little bit more stable and more secure. So that chart is why I think it's over, because it kind of already has been over for a few years.
What about ETH? So I'm going to do the same exercise on ETH. Where is ETH in this logarithmic progression that you talk about? Like, is it also one of these much more mature assets? Is it not? I mean, it looks to me like it.
I think the issue with ETH is it's just gone sideways for so long. At this point, it's like the market is still trying to figure out, does this thing actually have value? And then every now and then you'll have spurts of course it has value. Look, it's going deflationary. Look at how much usage is being generated. And then it stops. And people are like, okay, well, maybe Solana is going to kill it. I think that basically the jury is still out on ETH, and the price action is reflecting that. It has the potential to really fill the shoes that it was given and say, okay, I'm going to generate a ton of usage and people are going to build on me and we're going to be adopted institutionally. But it hasn't done it yet, in my personal opinion, and it hasn't really shown it yet. So that's what the price action is showing you. The price action is showing you, I don't know.
Are you bullish on it for the rest of the cycle? Like, I mean, there's been a lot of hype and it's just started moving, and at the same time Solana's kind of like stopped moving for a while. Shift in focus. Like, we know crypto is actually about mindshare more than anything else. Like, how do you see it for the rest of the cycle?
Well, okay, I'll be honest. I've always been a resident ETH bear. I hate to say it, but that's just my personal view on ETH. I think for technical reasons, it looks phenomenal. Like from a purely technical and flow perspective, it looks phenomenal. 3 reasons. 1, you have all these treasury companies buying stuff up. 2, you're finally seeing rotation. And what I mean by rotation is a lot of people that made a lot of money on Bitcoin are now moving those ETF dollars over to Ethereum. And 3, we're still cheap on a relative basis. Bitcoin is way above all-time highs and Ethereum's not. And so like from a purely technical and flow basis, I really like it. And that's where I'll leave it.
Santi?
I think it can, yeah.
Yeah. Exactly the same as Avi. I haven't held ETH because I have too much exposure to the Ethereum ecosystem by virtue of early stage investments and a lot of L2s and whatnot. But but structurally, and I think I wouldn't be surprised if it vastly outperforms. From here to the end of the cycle, it probably delivers a pretty interesting return profile. As Avi said, it has just been sideways for such a long time.
It outperforms Bitcoin, or it doesn't outperform Bitcoin between now and the end of the cycle?
I think so. I think reasonably, I think it does at this point.
Solana?
I actually, that's a great question. I don't know. I mean, I would go as far as saying that there is a possibility where the ETH SOL ratio stays pretty range bound. I don't see like that many specific catalysts for SOL. I mean, we talk about SOL, like for instance, you just have Pump that is going to launch its own chain. And that I think sets an interesting precedent for how do you think about monolithic chains? How do you think about the value accrual? And so it then places more questions around.
I thought that was a rumor. I thought that wasn't confirmed that Pump was going to launch its chain. The last I heard that was like came from one source and it wasn't a real source. And from what I heard, it's from what I heard and also what I can imagine, like what is the value for Pump to move off Solana? Shouldn't they spend the money on not running blockchains and actually building like amazing stuff?
Well, for the simple reason that you have all these other L1s that are still in the top 20 that have ghost chains, but still have created an immense amount of value. You have, pull up the top 20 chart. They're all projects that launch early on and command attention, as you say. Cardano, Hashgraph, IOTA, Ripple, all of these are L1s. It is, if you study incentives, there is a very strong incentive for any project that catches interesting attention to launch their own L1. It is as simple as that. The devs can make more money. The project can make more money by being an L1. The market likes to value an L1 at a premium, and therefore you're going to do it. And so I think, again, it might be a rumor or not, but I think the Pump team is focused on, they understand that they own the user relationship, and they find themselves in a very interesting position to then do something else. Why would you leak value? And why would you pay an extra tax for block space when you don't have to? And I think this is, look, we can bring on more technical people. My interpretation I've seen it time and time again is the incentives are very strong for people to go launch their own chain. The level of effort required to launch your own chain is lower and lower as time goes by. The tech is increasingly being commoditized. It is no longer 2017 with white papers where you have to sort of, it is still complicated. You have to manage validators. You have to, I'm not trying to minimize that, but it has marginally become easier. So if you saw it before, you're definitely going to see it going forward, particularly for projects that, get.
I think something's spot on.
And I think I go back to Ethereum because, again, if maybe Pump doesn't leave Solana, but if it were to leave Solana, for this reason, I think it changes the criticism that Ethereum's always faced, which is, okay, what's the value accrual? You have all these L2s, you have Arbitrums and the OP stack and Hyperliquid. But I think people keep coming back to Ethereum because that's where the liquidity exists. And so it does have that attention and liquidity and candidly institutional bid that no other project has. Like Solana doesn't have as much institutional regard and liquidity flows as does Ethereum. Like, it's not even close. And for that reason, I think it has made me change a little bit of my mind. I was very vocal before around, I couldn't justify why Solana given the amount of fees, given the amount of activity that had happened over the last 12 months, you would have sat there and said, is it really worth 20% of Ethereum? I would have thought that ratio was just structurally off. Now I find myself changing my mind, and I'm actually of the view that if this cycle, you always want to think about what is the key word? How are you going to fast forward to the next cycle? How are we going to look back and describe this cycle? And I think this cycle will be institutional bid, all-time high, DATs. And so if you invert, you say, okay, then which chains have that visibility in the minds of institutions? Certainly Bitcoin, certainly Ethereum, and certainly Ripple. Everything else, not so much.
So are you a Ripple bull now? Because I've listened to a couple of podcasts where you've actually mentioned Ripple. I mean, I find it hard to believe that Santi, my smart VC friend, is a Ripple bull.
Listen, I don't own it, but I will tell you, I've become this industry does not trade on fundamentals. It trades on memetics. It trades on attention. And Ripple is actually memeing its way into existence. Like Brad is the Michael Saylor type of strategy. It is bought hidden road. It still has a lot to deliver. Is it worth what it's worth? I think we can't. No one in this room can justify the valuations of any crypto asset project other than if you look at it on a meme value. On a meme value. Bitcoin being the ultimate meme. But you can't, but Ripple is interesting. Is the tech, am I bullish on the tech? Am I bullish? I'm not suggesting that. I'm simply removing myself from my bias and saying, if $100 is going to come into the space, how is it going to be allocated? Because I think fundamentally, this is how crypto markets have traded, and it's not on the basis of fundamentals. And so I continue to believe that Ripple is synonymous with decentralized finance and the future of finance. That is how it's been seared in the minds of the public. And that you have to give credit to Brad and what he's done, because you go survey 1,000 people outside of this micro industry.
True.
What are they going to say? It's like the Cardano effect. I can't explain it. I don't like how the top 20 sits today. I didn't like it 5 years ago. I didn't like it 7 years ago. But you have to honor that this is just how the market works. And so I'm putting aside my personal bias, and I'm just objectively giving you an opinion like Avi just did with Ethereum. I am constructive other blockchains, other projects, but I think Ethereum is an institutional chain, and so is Ripple, and that's going to be what defines this cycle. And so if I'm going to redraw my portfolio from scratch, I'm likely going to allocate mostly to Bitcoin because we're late in the cycle, marginally to Ethereum more so than anything else, and maybe some Ripple as ultimate meme bag because the door is really wide on the way out relative to other memes, but I do think it outperforms Ethereum.
I mean, it's incredible what Ripple's been able to pull off, to be completely honest. I mean, going for something that we would just constantly shit on. My friends would text me. They'd be like, should I buy some Ripple? I'd be like, you're an idiot. Don't buy it. And then they would massively outperform me. And it's just I think I've capitulated to the idea that, I mean, one thing about Ripple that they have going for them that not a lot of other blockchains do is they have a very dedicated foundation with a lot of capital, a lot of money. I mean, for the longest time, we would make the joke, oh, what's Ripple's business? The Ripple Foundation, it's selling Ripple. That's the business. But now they're trying to actually do something with the cash. And to Santi's point, they are known among Wall Street. I mean, people it's like Wall Street catnip. And so they have the opportunity to actually build something real. They've got billions and billions of dollars of cash on their balance sheet. I mean, I think it's likely that they also go public in the next 6 months, and you're probably looking at a $50 to $100 billion valuation, and then they can do even more.
Would you buy Ripple?
It's kind of the perfect storm.
You're selling it well. You're selling it well. Would you buy?
I'm a trader. I'm a trader. So would I buy it right now at this price? I mean, honestly, I'd probably allocate a little bit. But I would wait. Like right now, I'm in sort of wait and see mode. I think Bitcoin can, just talking as a trader, just short-term trader, I think that we probably could see a slight correction over the next week or two, especially into August, low months, lower liquidity. And then I'd be looking at building the Santi portfolio. That's what I'm going to call it. The Bitcoin, Ethereum, Ripple portfolio.
I will say, I also agree with Avi here. I do think that we consolidate over the next month or so. Like we've had just intense pullback, like rally after Liberation Day. I think the market's cool. Like earnings season's going now, and certainly like, you know, what Meta and Microsoft, all of that computes. But I do think we probably, if not sideline, go sideways or a bit down. So I'm cautiously like observing the next couple months. I don't feel the need to really go out off on the risk spectrum for the next 2 months. It's summer, August coming. People want to check out. But I do think like September, October, like especially mid-September towards the end of the year, I'll put size around, again, as I said, like putting aside like traditional markets, because then you can talk about like Robinhood, Coinbase, like maybe that is the best exposure to this asset class. But I do think like 60, 70% Bitcoin, 20% Ethereum, 10% really high, like very opportunistic stuff, short. Yeah.
Holy shit. I can't believe it. This is the discussion that we're having, but I'm going to believe it because two smart people are here with me talking about it. Guys, before we go, I want to just talk to you about one more thing. Pump. So Pump.Fun launched. It went to, it sold at $4 billion. It went to $7 billion or $7.2 billion. It went all the way back down to $2.3 billion fully diluted valuation. And now it's trading at about a $3 billion fully diluted valuation. What's our feeling here? The team's been like absolutely quiet. We've had one interview from Alon, and that was on the thread guy. I think it was a bit of a botch up of an interview. What do you guys make of this pump thing? Would you be buying this chart?
Well, I'm biased because I was an early investor, so I have a lot of locked exposure to Pump. Again, removing myself from my bias as much as I can.
So wait, you invested in the 20 million round, the original round.
It was slightly higher than that, but yeah, it was quite low at that point.
So I have a question for you. How old is Alon?
Well done.
How old is Alon? Because I always thought he was in his 30s, but then Suzu published a tweet that he's in his 21.
They're among the youngest team I've backed in the space, absent Vitalik when he started Ethereum. I believe he was like 18 or 19 at the time. I almost love the fact that I never understood how old he was, like Vitalik. I would have never swapped Bitcoin for ETH in the ICO, but they're young, but they're sharp. They're like maniacal in the best way possible, as founders can be. I think like if you pull up the Hyperliquid chart, it had like 3 or 4 months of consolidation for the airdrop folks to like really like you had to prune all of that out.
But there's no airdrop here. But there's zero airdrop here. That's the thing. That's part of the reason why the chart's collapsing is because there's no airdrop.
Yeah, correct. No, that's a good point. What I'm trying to say is this is giving you a preview on how trigger happy funds are going to be in December when they want to crystallize carry, because the reality is that most of the like they raised, I guess it was 400 or 600 million. It was roughly 400 to 500 million at a $4 billion valuation from largely institutional. And then they raised from retail that like sold out in like minutes. And you know, I think it was fully unlocked so they could sell out of that position. And I think that's what it tells you the state of affairs for a lot of funds that are trigger happy. I think a lot of those, I would have almost liked to, if you were to read the investment memo of most of those firms, I think most of them were putting on that position as a trade, not as an investment, thinking that this would maybe approximate Hyperliquid. Like 40 billion-ish range. So okay, it could be a 10x if we're really in a good market. Now, obviously, different story. I think this is the problem that you have. A lot of funds most of them haven't outperformed Bitcoin. They don't get compensated. Like Bitcoin's not the benchmark, but still they're down from a couple years of like underwater, and they're still barely like outperforming, and actually. This is probably the year where they make decent carry. That wasn't the case for prior years. So they're going to be really trigger happy. And I think that chart there has a lot of noise, but I think a lot of it, as I read into it, is people are obviously they're very sensitive and they are very trigger happy. And this was not an investment for the vast majority of participants. It was a trade, and it hasn't panned out the way it has. Would I buy it at this level? Likely. Again,
I mean, they're still making good money.
Exactly, yeah.
But it's declining. It's declining, and bonks stealing market share, and yeah. I mean, look, I made it one of my. I'm accumulating one of my biggest positions in Pump, but my thesis is a very different thesis. It's a little bit of Santi's thesis that those that came in wanted to trade, realized there's no trade, and then kind of like started dumping their tokens. But the second thing is he's got $2 billion in cash. He's got the $1 billion that he raised and the $1 billion that he had in fees. He has got 25% of tokens for community initiatives, which none of his competitors have. Jupiter doesn't have 25%, and so doesn't Bonk. And we saw in the last 2 days that as soon as they started doing more aggressive buybacks, they bought back 100% of their tokens. The token started to move again. And so you can't bet against a team that's got $2 billion and 5 levers that they can flick on at any time to reintroduce people back into the protocol. So my thesis about what this guy's doing is he's saying, look, let the Jeets get out. I needed the raise. I got the raise. Whoever doesn't want to be in, let them get out now. Let them bleed to death. At the same time, what I'm going to do is I'm going to wait until the time is right, and then I'm just going to switch them on. Fee sharing, airdrop, sharing exchange revenue, sharing swap revenues with creators. Flick. And then this thing is going to shoot up to $10 billion or whatever else. The biggest part of my thesis here is that if he gets social network right, I went onto the social networks, specifically TikTok, and I looked at how much of it is actually memes. And I was thinking to myself, if someone gets this social network, meme social network right, that you can actually monetize, and he's proven the monetization better than anyone, then we got ourselves a game here. And that's why, like, for me, at a $2 billion valuation or $2.5 billion valuation, I'm paying 1.2 times cash. Like 1.2 times cash. I just don't know how to stop myself from buying it.
Yeah, that's what's the NAV on that? The premium NAV. Look, you always want to be buying something that there are people that are forced sellers. I think you have a lot of forced sellers in that chart. I think are you going to tick top to bottom? No, but is it? I ultimately, as a more traditional investor, I could say the team is very impressive, and they have been proven to execute and move fast. And
you're not worried about their age. You know what? Like the age scares me. Like 21-year-olds with $2 billion is a very, very, very scary thing. Like 21-year-old, $2 billion. that keeps me awake a little bit. Avi, you wanted to say something?
Look, you could have said the same about Ethereum and many other projects. I think, it changes the game marginally. But in my conversations with one of the founders, they've been acutely aware as even 12 months ago, more than that. They were like, they see this opportunity. They layered in video. They're just they're wired differently. I don't know how else to say it. But
okay, fair enough.
Anyone that makes like ungodly amounts of money, the mindset changes a bit. But I don't know. It's one of those things that you're gonna have.
I'll say $100 million is enough to run away with, and they didn't run away with 100.
That's exactly right.
He could have never worked a day in his life. So I think genuinely the only people that go from 100 mil to 2 billion are the people that really just want to fucking work. Yeah. Otherwise you're calling it quits at 100.
And love the fucking game. Suck could have sold Facebook for $1 billion and he didn't. And now he's sitting at $1 trillion+ business. He's just wired differently. He loves the fucking game. Yeah. I think the Pump has an element of that. The Pump team has an element of that. It's a tall order, but they're super well capitalized and they move fast, and you have a lot of forced sellers in that chart. So, I'm
Avi, are you buying it?
No.
I may or may not own some from lower levels. I saw the same thing that you guys saw, which is that people were just coming in the chart. They were liquidating it, and I like to, as a trader, I like to buy when people really hate something. And when there was one day where the entire timeline on Twitter was just filled with pump hate and alone, are you going to do anything? And everyone was selling. And I'm like, okay, it's time time to buy some of this because they're making money. I have found that the newcomers tend to flash but then die, and Bonk is a newcomer in this game, and I think that they do have I think that they do have a competent team, but I think that Pump has more to it, more substance to it.
Yeah, Avi, right? Question: Pump at 3 billion or Hyperliquid at 50-ish? What do you buy?
Pump
it
for
3
sure.
every time.
Pump for sure.
Yeah. Don't get me wrong, I love Hyperliquid, but Pump at 3 every time.
But look, there's a version where Pump on a fundamental basis, like volume, fees, and buybacks, is not too similar from Hype. And if the market comps it that way, it is not. It's a very different valuation, that's sort of the comp that I think is appropriate.
All right, guys, listen, we're out of time. I mean, I must say, I've really enjoyed this Friday conversation because it's like we've all been here for multiple cycles, and it shows that we don't buy the shiny objects anymore. We've got such a element of skepticism, which I think if we would have spoken 2 cycles ago, we would have all been a little bit hungrier and a little bit less skeptical. But I think this has been a very good discussion. It's been like very much on the ground. So I really appreciate you guys. I appreciate the Alpha. I appreciate the fact that you guys keep coming on to Banter. Thank you so much from all of us here at the Banter fam. Avi, Santi, thank you guys.
Thank you.
No, this is awesome. Thank you so much.
Thanks, guys.
Skeptical but not cynical.
Exactly, and still love this industry and carry on fighting the good fight. To you guys, the Banter fam, guys, that was amazing. I mean, what a way to end the week. And yeah, it is the end of the week, so I'll see you guys again. On the weekend, I'm going to do a very interesting show, and I think I'm going to do it on Sunday night. I just have to think about it a little bit. I'm going to plot out a strategy that I'm adopting for the last part of the bull market, and I think you'll like it. So I'll see you guys again on Sunday. Until then, trade well, my friends.